Hey, welcome back to The Dive. Today on the show, we have the founder and chief strategist of Mill Street Research, Sam Burns. Sam is going to share his insights on inflation, the Fed strategy, a possible recession, the midterm elections and how they could impact the stock market, FTX, and he's going to share the sectors that he likes at the moment. But before we bring you Sam's interview, do me one quick favor and just hit that subscribe button below me there so we can continue to make you these videos. Hey, Sam, welcome to The Dive.
Hi, Cassandra. Thanks for having me on.
Yeah, thank you so much for joining us today. Okay, so let's start off with the U.S. Consumer Price Index. According to the BLS, October CPI came in at 7.7%. What is your outlook on inflation?
My guess is that the worst of inflation is probably behind us. I think we're going to probably see it continue to slow down from these very high levels, which is what the Fed is really aiming for. I think there'll be, it'll be a bumpy path. The data is noisy, and so it may not be a straight line down from here. But I think it's going to start to slow. There's been some other indicators that suggest that inflation pressures are easing now, and that we'll start to see that in the CPI over the next few months.
Do you think that the Federal Reserve has a bias towards lagging data that resulted in delayed action?
I think they do. Yeah, they very much focus on the labor market and the CPI data when they talk about policy, and those are relatively lagging indicators in terms of forecasting the overall economy or inflation itself. So I think there is a risk that they're focusing on those indicators just because they're the most prominent and the things that are most sort of in the attention of the average person, and certainly in terms of politicians. So I think they have a risk of looking at lagging data. I think they're aware of the leading indicators and what they're saying, but I think that they're kind of trapped a little bit to try to keep policy tight until we see CPI and labor market indicators start to really turn.
Now, we often hear recessionary talk from the mainstream media, and you mentioned on one of your recent commentaries that the U.S. economy does not appear to be in a recession now. Could you give us some color on this?
Sure. I think most of the data overall shows that the economy is slowing from where it was last year, but not yet in recession, meaning sort of negative growth. There's several data points, the GDP data. There's a weekly economic index the Fed itself produces that's still in positive territory, showing about 2% real growth right now. So I think on a current basis, the economy is not in recession now. I think the leading indicators suggest that it could go into recession next year if things don't, if the Fed continues to tighten and other things go negatively. I think we could avoid that. So I don't really see a big recession as an issue. I think we might see a big slowdown in growth and close to zero growth, but not a recession at this point.
So shifting gears a little bit, midterm election results are still coming in. Do you see any change in sentiment on the market now and after the results are announced?
I think the Fed is still dominating the market narrative. So the politics have been kind of pushed to the side. I think the fact that there were not any major surprises at the sort of macro level in the sense of a big wave election one way or another, and that there will still be essentially some form of divided government and less fiscal activity going forward, I think will keep the market relatively sort of balanced in the sense that it will not have a strong reaction either way once all the final results come in. So I think it could have been an issue, but I think the results are such that it's probably less of an issue now. And I think the Fed still remains the biggest policy factor, more so than Congress.
Okay, so Sam, we have to ask you about cryptocurrencies. Sam Bankman-Fried's FTX.com is all over the news due to the company's insolvency. What are your thoughts on what's happening in the crypto world right now?
Well, with the big caveat that I'm not a crypto expert, and most of my research and writing is not focused on crypto, just because my institutional clients are not heavily exposed there. I think it's an indication of the troubles that a new area like cryptocurrencies is facing, and the fact that regulatory changes and are really going to be a major factor there. That the lack of regulatory oversight is what allows things like that to happen, and why banks and things that are regulated don't see this much anymore. And so I think it's a big warning lesson for those who've been involved in crypto to really have to be much more careful about who they're dealing with and what's really behind a lot of these companies that have really come under a lot of pressure lately.
We also follow you on Twitter, and we saw you tweeting about earnings. Given the current macro environment, are there any sectors that you like right now?
There are, certainly on a relative basis. Analysts are cutting earnings estimates for most stocks and most sectors right now. The energy and financial sectors are holding up relatively well, along with utilities and healthcare to some degree. So I would say that my favorite area probably right now is financials, and particularly banks. They're one of the sectors that actually can benefit from the Fed raising interest rates and the higher interest rates they can charge on loans relative to what they have to pay for deposits. So the profitability of traditional bank lending is much higher now than it has been for many years. So, and there's still a fair amount of loan demand out there, even as the economy started to slow a bit. So I think a lot of traditional banks, meaning those that are not too exposed to the capital markets, stock and bond markets, have a lot of tailwinds right now in terms of their earnings. And so that's one of the areas we've been really focused on in my work.
So lastly, Sam, where can our viewers go to check out your research and commentaries?
Well, certainly millstreetresearch.com, my website, is where you can get a sample research. And there's a blog there that I post on periodically that will give examples of kind of how I do research and what kind of indicators I look at, give people a pretty good feel for what kind of work I do. And then certainly those that are interested in subscribing can reach out to us through our contact form there, and can certainly follow Mill Street Research on Twitter and on LinkedIn.
Okay, well, great. Thank you so much for joining us today, and we will hopefully talk to you again soon, Sam.
Great. Thanks very much, Cassandra.
Thank you all so much for watching. And if you guys like content like this, make sure to hit that subscribe button so you don't miss any of our updates. We'll see you tomorrow. Bye.